I'm Dr. Bill Gannon. I'm a consulting physician down in Washington, D.C. I'm a consultant to the pharmaceutical and biotech industry.
Well, it's just such a pleasure to introduce you to the people that are visiting awomensissue.com to find out more information on long-term care claims. I understand that you're at the beginning of a long-term care claim. Can you tell us a little bit?
That's correct. My mother is 86 and has finally come to that point in life. The house has become a bit too much, and it's time to move to an assisted living community with a little more than just the standard, assisted living like an elder community. She's going to need a little more assistance with dressing and movement and that sort of thing. And then exacerbated by the fact that her left hip decided to fall apart, known to anybody except maybe her, which led to a left hip replacement, which has now led to a rehab facility in New York, which then will lead after that to a relocation to her assisted living in Washington, D.C.
So if you can just kind of share what's kind of surprised you and what you'd like to pass along to others that might be in the situation.
My mother bought her policy 24 years ago at
wow.
the recommendation of her financial planner, who was also their insurance agent as well. And the policy at the time was bought with, I think it's a 4.5-year cap, thinking that, back in those days, everybody thought, well, one, you wouldn't live that long after you went into an assisted living or a nursing care facility, and two, then you would either transfer your assets, whittle down your assets, and then or essentially to Medicaid or a ward of the given state you were living in. In 24 years, that has sort of plans and rationale have changed a little. However, we didn't change the policy or didn't update the policy to go along with any of those potential changes. The one thing that my mother's policy had that I didn't realize was a cost of living or an escalation clause annually.
Yep.
I think that's the right term, Marilyn. And so, it was based on a given rate 24 years ago. And for example, my mother's assisted living, with all the bells and whistles, is going to be $5,000 a month approximately. But her coverage will cover up to $5,700
wow.
a month because of the cost of living increase, et cetera. And it did the same if she were to go into a full nursing home facility. It would even be a higher monthly, which was a nice thing to know. The 4.5-year term on it, given that my mother is 86, sort of helped offset some of the actuary tables, so to speak. The fact that we still have the family home and that will be sold, that money will be held in an account for future use as needed. So from the planning aspect, our financial planner at the time was very helpful and very astute